Although talking about insurance may not be the most enjoyable subject, it is absolutely important to do so. Let's first define insurance. Insurance is a tool for risk management. When you purchase insurance, you acquire protection against unforeseen financial losses. If anything unpleasant occurs to you, the insurance company compensates you or someone else of your choosing. Hello everyone and welcome to Finance Wisdom. In this video, we're going to talk about what is Insurance 2022. How does it work? If you are new to this channel, do like and subscribe to the channel. It's an inconvenient requirement that we all pay for to prevent us from going deeply into debt in the event that our home burns down, we have a vehicle accident, or if anything horrible occurs. We can retain our peace of mind by having insurance because it gives us the assurance that even if something terrible occurs, someone else will cover the expense of fixing it. Although this can seem a bit strange to a layperson, in other words, the insurance provider will buy you a new home if you pay $250 a month for home insurance and your house burns down after only 6 months. You would have only paid them $1,500 despite the fact that the house was probably worth hundreds of thousands of dollars. Why would they act in such a way? The strength of insurance is in that. What is Insurance 2022? Generally speaking, the fundamental idea behind insurance is that one party, the insurer, offers a guarantee for a risk that may or may not materialize. The third party, the insured, pays the insurer in return for security against that risk. When a lot of individuals take the same risk, the likelihood that the danger will materialize is distributed across a lot of people and remains about the same. Insurance firms profit by calculating the amount of money they must collect in order to break even on a particular risk with a certain likelihood. The result of that computation then affects how much each insured party pays each month. Although the arithmetic is often straightforward, insurance firms really use quite sophisticated models to account for all of this. How does an insurance company work? Different insurance is provided by different insurance companies. The majority of insurance businesses will focus on a certain kind of insurance. This is so that each business may create a complicated model that will allow them to produce money and turn a profit. If you insured those homes with the assumption that 1 in 100 of them would burn down each year, but the actual rate was in 5 in 100, you would quickly run out of money. Most likely, you would undercharge for everyone's insurance, leaving you responsible for those 4 additional residences. The majority of individuals worldwide have these essential insurance policies, some of which are legally required to be kept, such as vehicle insurance. And there are many insurance firms, ranging from auto to health to life to homeowners. Thoughts may be running through your head as to why you wouldn't simply wish to save your money each month and deposit it into a bank account. In this manner, you will have a lot more money even if nothing negative occurs. While that may be the case, you are now the one who is in danger. You'll have an additional $3,000 at the end of the year if you save $250 every month for a year on house insurance. However, if your home burns down next year, you'll be on the hook for the repair costs of a few $100,000. If you're prepared to take that kind of chance, if it probably isn't true. Consequently, purchasing insurance is often a wise decision. It transfers all of the financial, emotional, and risk load from you to a much bigger organization that can afford it. If you like this video, don't forget to like and subscribe to the channel. Let's continue to tackle what is Insurance 2022. When you consider insurance to be nothing more than a method of paying a company to take on your risk, you may begin to see that insurance might potentially be offered for nearly anything. This is because insurance is just a means of paying a business to take on your risk. Are You worried that your toaster could accidentally overheat one of the raisins in a cinnamon raisin bagel, causing it to suddenly combust and destroy your whole pantry full of stacked Lucky Charms and baked beans? Although it is an extraordinarily narrow niche, it is possible to get insurance that covers only that. In a similar vein, if you are really beautiful, you could worry that if you have even a single fall, you will scrape your face, become less attractive, and ultimately end up sad because no one will like you anymore. You might, of course, protect yourself from financial loss in the event that this occurs by purchasing insurance. This is not too far from the truth. Because of the financial importance of their image, celebrities often have particular sections of their bodies covered. Nevertheless, there are a few more pieces missing from this puzzle. So let's discuss reinsurance and insurance claims. What is reinsurance? Reinsurance is what insurance companies purchase when they desire coverage for their own insurance policies. It's not a joke, folks. If an insurance company determines that they are overexposed to home fire insurance and the hot summer is on the horizon, they may decide to take out reinsurance policies on their insurance contracts to guard against significant losses in the event that all of their homes catch fire due to global warming and other factors. Then the reinsurance company bears the whole risk. Thinking about this is essential. When a storm hits Florida and destroys all the automobiles that an insurance company has covered, they may be left with more compensation obligations than they can handle. They had no more money, so nobody would be reimbursed for their ruined car when they run out of money. Insurance is a very important part of an insurance company's ability to make money and stay financially stable so that they can pay out claims to policyholders when they are made. What are the claims? Insurance companies don't simply automatically pay out claims. So, if you have auto insurance and provide them with a total vehicle, the insurance provider will look into the matter to make sure you didn't do it deliberately to collect the claim. If they discover you have done that, it is considered fraud, and you may be sentenced to prison time for fabricating insurance claims. In reality, it occurs pretty regularly. When things are tough, many view it as an opportunity to either earn a large financial windfall or escape an unaffordable automobile or housing payment. Instead of making potential payouts based on inaccurate information, vehicle insurance firms as the most qualified investigators in the industry. Now that you know that insurance is a sizable industry, you can probably understand how lucrative it can be if you use the appropriate models, take the right sorts of risks, and have competent investigators to ensure that you are not taken advantage of. On the other hand, insurance may help you save a ton of money. If the worst occurs and you purchase it, insurance is often a win-win situation for all parties. Customers have less anxiety as a result, and businesses profit greatly. In essence, this is what is Insurance 2022. We've reached the end of another video and thank you for watching. I hope you have learned something from this video. If you like this video, do give us a like, subscribe to the channel, and comment down below. Thank you and goodbye!